Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar extended its gains from Thursday's strong bounce as investors reacted positively on Friday's latest US inflation report, which showed price pressures nearing the Federal Reserve's target of 2%. This reinforces the Fed's recent 50 basis point rate cut and heightened expectations for further reductions. August PCE index, the Federal Reserve's preferred inflation gauge, showed cooling on Friday after the core PCE rose 0.1%, meeting estimates, and the year-over-year figure was 2.2%, slightly below the 2.3 forecast. Nevertheless, markets are now fully pricing in a 25 basis rate cut in November, or even larger, possibly a 50 basis point reduction. The policy rate, currently at 4.75 to 5%, is expected to drop by 75 basis points by the end of the year and settle between 3% and 3.25 by mid-2025. Looking ahead to this week, investors have got a large amount of economic data to review upon, and with the main event being Friday's September's job report, or the non-farm payrolls, which could shape expectations for the Fed's November 6th to 7th meeting. Also to watch this week is on Monday, Fed Chairman Powell addresses on the economic outlook at the National Association for Business Economics. So with the Australian dollar closing above 69 cents, the target has been reached, but now could see an extension on to 70 cents and reassess from there. I do feel we may see a bit of profit taking given the fact that 69 cents was a bit whipsawed, but nevertheless, any pullback should find support around the lows of 68.45 and reassess if we see any challenges or break from there, as the market may find strong demand from 67.90. The euro took another challenge to that top side around 112 figure 15, but the brakes were slammed on, even though the US dollar index, which measures the greenback strength against a basket of 6 major currencies, slipped back to 100.40. Given the fact that the market is a little bit weaker to the start of this week, we could see a retreat from 112 figure 15, but towards 110.80 should find good demand and eventually see the market break above this level of 112 and on towards 113.5. The market was very whipsawed on Friday for Japanese yen as it strengthened amid significant volatility coming through the market as traders reacted to the election of the former defense minister as Japan's next prime minister. From that, the market has posted an engulfing candle that could see further weakness into the start of this week and look down towards its recent target. I was calling at 136 to 138. In light of how the market has performed and given the fact that this is a very large bearish candle, the bears are likely to take control to the start of this week. A slight reaction from 134 for sterling, but nevertheless the market is still likely to show initial demand from the lows of 133. And overall, I still feel the market could get up towards this target around 135 and reassess. Even profit taking came into gold after the market backed away from its near highs around 2,674 as profit taking increased. Nevertheless, I still feel the bulls are waiting to prance back into the market, and they're somewhere around 2,646, and therefore could see another topside challenge and reach the goal of 2,700, and then it's time to reevaluate. Wrapping up with oil, it posted a weekly close and an engulfing candle, given the fact the market was a little bit firmer on Friday. Nevertheless, the market is still a little bit mixed here and therefore could see a little bit of uncertainty in terms of direction, with the broader target now around 66.5 to 68.5, but a break above the top side could reinstate the target of $71 to $72 a barrel. Well, that's a wrap. Thank you for joining me, and as always, look out for the interest rate report. I hope you enjoy the great start to the new week.